Claim back overpaid Spanish inheritance and gift tax. Summary. An action for failure to fulfill an obligation was brought against Spain on the 7th of March of 2012 before the Court of Justice of the European Union. According to the European Commission, Spain's inheritance and gift tax breaches EU law. The ruling is expected in the following months and, if Spain is found to be at fault, we shall be able to claim back overpaid inheritance and gift taxes. Introduction. Why is Spain's inheritance and gift tax breaching EU law? Spain's legal system divides legislative competencies between the state and autonomous communities. Each autonomous community regulates the taxes for inheritances and gifts on its territory. Then, if the autonomous community's legal framework is applicable, nearly every time the tax burden is much lower than if state law was applicable. Consequences of the different legislations. For example, if someone inherits 300,000 euros, the inheritance tax due shall vary as following. In Madrid, the tax should be of 252.46 euros. In Canary Islands of 10,134.17 euros, and in Andalusia of 25,358.64 euros. And now, according to state law, the tax should have been of 23,446.14 euros. To who does the autonomous community's legal framework apply exactly? For inheritance tax, the autonomous community laws are applicable only if the taxpayer and the deceased are Spanish tax resident. The taxpayer is considered as a Spanish resident because he pays personal income tax in Spain. Then the deceased is qualified as a resident only to determine which autonomous community legal framework shall apply. For gift tax, the autonomous community's laws are applicable only if the taxpayer is a Spanish tax resident, and in case of immovable property, when the property is situated on a Spanish territory, to determine which autonomous community legal framework applies. Where in Spain do resident taxpayers pay the lowest amounts for inheritance and gift tax? In Cantabria, in Basque Country, in Navarre, in La Rioja, in Castilla and León, in Madrid, in Castilla-La Mancha, in Valencia, in Balearic Islands, and in Canary Islands. It is important to keep them in mind to know where it's more interesting to claim back inheritance and gift taxes. The discrimination. The ruling of the Court of Justice of the European Union. The European Commission brought an action against Spain on the 7th of March of 2012. The Court of Justice has not yet ruled. We expect the court to rule in favor of discrimination, so that Spanish residents and non-residents are treated equally, so that fiscal advantages apply to both residents and non-residents, and, in a less probable way, that taxpayers are not discriminated because of the residence of the deceased. The article probably breaching EU law. It's Article 32.2 of the Law of 2009 for the financing of the autonomous communities. As we saw before, the autonomous communities legal framework applies when the taxpayer is a Spanish resident, as in the first paragraph of this article. Then the paragraphs A, B, and C determine the law of which autonomous community applies. For successions, it shall be where the deceased had his ordinary residence, and if it is not on the Spanish territory, the autonomous community legal framework does not apply. For gifts on immovable property, it is the law of the autonomous community where they are situated that applies. So, if they are not situated on the Spanish territory, the autonomous community legal framework does not apply. Regarding EU law, the European Union principles Spanish law could be breaching are Article 21 of the Treaty on the Functioning of the European Union and Article 28 of the European Economical Area, the principle of free movement of persons. And as well, Article 63 of the Treaty on the Functioning of the European Union and Article 40 of the European Economical Area, the principle of free movement of capitals, but only if the different treatment between residents and non-residents is an arbitrary discrimination or a disguised restriction on the free movement of capitals and payments, and it is not justified by public interest. Why do we expect this ruling? Because Spain was already found to be at fault by the Court of Justice of the European Union regarding taxes on capital gains in 2009. Then it could be the beginning of the European Union harmonization of inheritance and gift taxes. Because as well as the member states were referred to the Court of Justice of the European Union by the Commission on similar grounds. On top of that, Luxembourg and Belgium have already modified their inheritance and gift tax because of the European Union Commission. And finally, on a national basis, the same matter is being considered by the Spanish Constitutional Court. Now regarding the discrimination between Spanish residents and non-residents. The most probable discrimination case, because it would modify only slightly the Spanish legal system. Case 1 for inheritances and gifts, when a non-resident taxpayer receives goods situated in Spain from a Spanish tax resident. Other less probable discrimination cases, because they would modify a lot the Spanish legal system. Case 2 for gifts, when a Spanish tax resident receives as a gift immovable property not situated on the Spanish territory from a non-resident. Case 3 for inheritances, when a Spanish tax resident inherits from a non-resident. Case 4 for inheritances, when a non-resident inherits from another non-resident goods situated in Spain. Figures. Some examples comparing the taxes paid in the following autonomous communities and the tax paid according to the state's legislation. In Catalonia, in the Canary Islands, in Madrid, in Valencia, in the Balearic Islands, and in Andalusia. In our first example, regarding inheritance tax applying the autonomous community legal frameworks and the reduction for inheriting a usual home and for parenthood, you can notice we have compared three different tax bases: 150,000 euros, 300,000 euros, and 600,000 euros. The autonomous community that is less interesting in this example is Andalusia, because for the tax base of 300,000 euros and 600,000 euros, you can see that it is above state law. So we should not, for these two tax bases, claim back overpaid Spanish inheritance tax for Andalusia. Our second example regarding inheritance tax applying the autonomous community legal framework and only the reduction for parenthood, because in this case we considered that the deceased was not a Spanish tax resident. You can notice that for the Canary Islands and Andalusia, for the tax base of 300,000 euros and 600,000 euros, it is not worth claiming back the inheritance tax. Finally, for gift tax applying autonomous community legal frameworks, for Canary Islands and Andalusia, it is not worth, as you can see, claiming back the gift taxes, comparing them to state law. Procedure. What should be done straight away? For taxes paid nearly 4 years ago, a claim should be filed straight away to avoid prescription. Otherwise, we consider it better to wait until the Court of Justice of the European Union ruling is published. But even if, it would be better contacting us in this case now as well to prepare the claim. If you have paid inheritance or gift tax in Spain, we shall be happy to help you claim back the overpaid amounts. Please contact us directly through Edisa at TGS-Edisa.com or call our offices in Madrid or Santander. You can as well contact the TGS Global member in your own country through our website tgs-global.com.